Hi there, this is routine weekly traffic light update for the week of ended on December 9th. Prior to going into the detail of the presentation, here the disclaimer. Traffic light and capital appreciation points are the results of proprietary risk analysis model and should be used as part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here's the typical agenda. We'll review the traffic lights on S&P 500, Dow Jones, NASDAQ Composite, and be looking for bullish and bearish trades. Here's the traffic light S&P 500 on December 9, 2016. I will go over the current chart status, go over the legend a little bit, and describe the overall risk situation. The current light is yellow, as you can see. It is in a yellow zone. The green line, the traffic light S&P 500 is in yellow zone. It has been yellow zone since September, so the risk has become more tolerable. As for the chart legends, the green line is a traffic light S&P 500. It's a risk indicator. The blue line here is the S&P 500. Is reflected by SPY daily close is an ETF mimic S&P 500. The red line and the purple line apply to the traffic light S&P 500. When the green line crosses the red line is a time to be conservative point. And as you can see in 2009 or 8 area, this is the point before the major correction starts. That's assuming if the green line continues to go up. And when the green line reaches up on the top area, the purple area, usually it's a sign that re-entry can be started. It's better for the re-entry to start when the green line crosses below the purple line. From the clip on November 18th, I compared the current situation to that of mid-2012. In the 2012 period, as the index attempt to reach a new high by testing the previous high, there were pullbacks. Each pullback is less severe than the previous one. Let's observe whether the current market showed a similar traits. There's no pullback yet. However, I also like to point out that at the time, the market was strong because perhaps has to do with lower PE ratio. The PE ratio of S&P 500 was about 14 to 15. The current PE ratio is about 25 to 26. Let's look at the traffic light Dow, an intermediate indicator. The indicator has a good history showing intermediate bullish and bearish signal, especially when the bullish red line and bearish green line cross over and showing divergence. In 2010 period, the red line is making a new high continually, and the distance between the red line and green line are large, so the market continued to its ascent. In the 2011 period, as the index tried to make a new high, but the red line making a new low, is a divergence, and eventually led to almost a 20% correction. At a macro level, we can see that about this period, May, we made a higher high than the 2015. It appears to be a more bullish sign, but at the same time, we notice the green line, it's ascending. Let's take a closer look in this period in the next slide. Here are some bearish and bullish views. On the bearish side, first, a bearish divergence could be forming when the index is making a new high, while the red line does not. That's what's happening right now. Second, instead of continuous descent, the green line creeping up a little bit, and it is near testing the resistance level around here. I would say cautiously that intermediate bullish trades continue. It seems that the market is a little bit too happy these days. As you can see, traffic light NASDAQ red line made a new high. At the current reading, the red line is at the highest level recorded in the last 11 years. In 2010, the index retrieved from this point, and in 2013, there was a small pullback. So it is safe to say that the red line here may not continuously ascend. There will be some sort of pullback. I will zoom in the mentioned period in the next slide. In the previous red line high, the index start to descend when the red line start to flat out. As you can see in about 2010 period, when it start to flat out, the index did not go very far, then it start to descend. Same thing over here in 2013 area. Let's monitor whether this situation develops in the next few weeks. If so, you will receive a notification. NASDAQ is bullish and is catching up to Dow as the red line is making a new high. NASDAQ making a new high, red line is making a new high. That's a bullish trade. And we had a bullish crossover on November 14th, and green line continued to descend. Here's the summary. Traffic light S&P 500 is in yellow. Traffic light Dow and NASDAQ shows more bullish and less bearish signs. Expect pullbacks when red lines in the traffic light Dow and NASDAQ start to flat or descend. Thank you for listening. Have a nice day.